Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Monday, October 18th, 2010. This morning we're talking about lots of chatter, and what I mean by that is, this week there's not a ton of economic data that's due out, but we're going to get a lot of talk from various policymakers and Fed officials. I've counted no fewer than 15 different officials from Japan, England, the Euro, and of course here in the U.S. That are due to speak on their various economies this week. So we're going to get a lot of talk, and what that can do sometimes is that can produce a lot of volatility because we're not really certain what anyone's going to say or when they're going to say it, or that sort of thing. And the market's been weighing these comments very heavily because we've got this threat of further quantitative easing here in the U.S. But today we're seeing some dollar strength as the market's starting to come around to the fact that, well, if the Fed does do some more quantitative easing, perhaps they're not going to do it all at once, and that they may do a step-by-step sort of deal. So it's going to be hard to see what's happening. But I just want to show you here. Take a look at the charts. We get a 2-hour chart of dollar versus loonie. You can see the recent dollar strength, and what I've done here is I've set up a Fibonacci retracement on just the most recent move lower here, with loonie strengthening up to parity. Okay, and you can see that this morning the 61.8 resistance area held on this pair, so we could see some sideways trading here, perhaps between the 38.2 retracement area and the 61.8, going into the Bank of Canada's rate policy meeting, which is due out tomorrow. Now, the market has increased their bets that the Bank of Canada is going to hold steady on rates going forward. So we may, see a little bit of a pop here for the dollar versus the loonie. But that's sort of the theme that's been going on. We've got risk aversion in the market this morning, and we've got a lot of these commodity currencies are now talking about holding off on their rate hike. So just a quick peek here at Aussie. You can see Aussie's pulled back a little bit. Also in a 2-hour, they hit parity. Also on Friday, okay, their minutes from their rate policy meeting come out on I believe it's Tuesday. So that's tomorrow as well. And that they may show a little bit of a dovish stance despite the inflation they've got due to global economic situation. Just look here quick at the Kiwi. Okay, the Kiwi looks like the same thing as the Aussie. If you just look at those last two charts, all right, they had CPI data that came out yesterday, which met expectations, showing a rise of 1.1% for the quarter versus 0.2% last quarter. So this is actually a pretty decent number, but we got to remember that they've got some economic problems going on there due to the earthquake that happened, so on and so forth. So the RBNZ is likely to maintain steady on rates as well. So I'm guessing Aussie, Canada, and New Zealand, they stay steady on rates going forward. Now we just want to take a quick look at the pound here. Okay, the pound actually looks like it put in a little bit of a double top here, just above the 160 area, which had been acting as previous resistance. Okay, they've got their minutes from their rate policy meeting, due out on Wednesday. All right, and then they've also got the finance minister's going to be talking about the proposed budget cuts for the economy. So, there are fears going on right now in the UK that they could be facing a double dip. All right, and if we look back here, I just want to go back a little bit further to the 1 year. You can see that the pound has really recovered versus the dollar from when it sold off earlier in the year due to the major risk aversion in the market. Now, if we look here at the euro, same time frame, you can see the euro's come back, but not quite as great as the pound. So we may get the euro continue to trade on anti-dollar sentiment, so basically doing the opposite of what the dollar's doing. But this could be a week where we see some of the correlations between stocks and the currencies decouple a little bit. We've got U.S. corporate earnings this week. By and large, they've been pretty good so far, but that should come as no surprise. They've all cut their costs because they haven't hired anybody. We could see a little bit of dollar strength happening in addition to decent stock market gains, so we're going to have to keep an eye on that one as well. Lastly, just want to take a quick peek here at the yen. Okay, we can see that let's go back to, that's the weekly chart. Let's go back to the 2-hour here. And yeah, we can look at it on this chart, 1 month, 2 hour. You can see possible double bottom set in here about 85, say. Now the threat of further Japanese intervention is pretty much gone away. It seems to be a losing proposition at this point. Okay, so but this may have put in a double bottom here. Now we've got a G20 meeting coming up this week in South Korea, so it's very unlikely that even if they decided that they did want to intervene further, they would do it before this meeting. Then they have to go and explain themselves to everybody, and that's not going to happen. So we've got the G20 meeting this week. Obviously, these currency wars are going to be a big topic of conversation. But up to this point, I haven't heard of any solutions here that are going to make anything happen. So expect it to be a whole lot of nothing as well. Now, we have all these policymakers talking this week, so we may see some of the trends reverse. I highly doubt anyone's going to come out and say, yeah, everything looks great and rosy and risk-taking's on. So I would think that the threat now is to the downside, and that's probably welcome a little bit, to see a little bit of risk aversion, to see some of these commodity currencies pull back. They've moved, too far, too fast. We have both the Aussie and the loonie hitting parity within the week. So, we may get a little bit of pullback there. So I'm also expecting that we're going to hear in the UK that, things might not be so hot there as well, and perhaps we get a further pound pullback from that 160 area. So we could see back to, say, around 157 and a half area. That looks like a good place to move over the course of the next couple days. So that's what we're looking at here. We've got the, with these policymakers talking, that could induce volatility, so just be on the lookout for that. It's not like a normal day where you're expecting an economic figure to come out or data, and you say, okay, it's at 8:30, so you know when to expect the volatility. You could be in a trade, and all of a sudden it just really picks up because somebody somewhere said something dumb or said something to goose the market. So keep an eye on that. I'm going to keep my trading short term this week. That may be a plan that you wish to follow as well. But regardless of what you do, just remember to keep an eye on your risk management. So that's what I've got for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.